Imagine this. You launch your dream business. Customers love your product, but you're barely making any profit. Sounds familiar? Here is the hard truth. Your pricing strategy is either fueling your growth or silently killing your business. Most small business owners struggle with pricing because they either guess their prices, fear being too expensive, or just copy competitors. But here's a secret. Pricing is a strategy, not just a number. And today I'm going to show you how to price your products and services for maximum profit without losing any customers. Because when you price the right way, you work smarter, not harder. Let's dive in. But before we get started, make sure to hit that like and subscribe button for more business growth tips. So why pricing is more than just a number? Pricing isn't just about covering costs. It shapes how customers see your brand, determines your profit margin, and affects your long-term success. Let's break it down. To price effectively, you need to consider your costs. Are you covering all of your costs? Your customer's perception? Are you charging what your product or service really worth? And your competitors? Are you underpricing and leaving money on the table? Most businesses follow this very broken formula. Revenue minus expenses equals profit. Meaning, profit is whatever left, if there is any. But what if I told you there is a better way? It's called the profit first pricing, and it flips the equation. Meaning that you prioritize profit first, not last. From Mike Michalowicz's Profit First, this approach ensures you build a profitable business from day one, instead of treating profit as what's left over after expenses. Profit is taken first. I highly recommend this book. Definitely give it a go. It was a game changer for me, and I do my finances accordingly. And guess what? I do make profit a lot more than before. My business is actually profitable without changing my pricing. So as this book says, you take your profit before expenses, ensuring that your business stays financially healthy. Your pricing should reflect this mindset. You need to build in your profit from the start instead of hoping that there is money left at the end. So how to apply the profit first pricing? Set a profit margin goal. Decide what percentage of revenue you want as a profit before anything else. Determine your operational costs, account for all fixed and variable costs so that pricing covers them comfortably. Factor in taxes and reinvestment. Avoid surprises by pricing in your business needs, and align pricing with perceived value. Charge based on a transformation and results you provide, not just the effort or time. So I will show you now how to apply profit first pricing, but please keep it in mind that this is only my example, so go and read the book because yours can look slightly different. So you have your income. That's all the money that's coming in, right? And then you extract your direct expenses. So direct expenses are all the expenses that you need to have a product or service. For example, if you have a product-based business, every material or the production cost that you need for that product so you can sell. If you have a service-based business, highly likely that you're not going to have anything. And this one does not include the wages. So that's a different category. So if you extract the expenses, direct expenses from your income, you get a number, and that's going to be 100%. And from there, you will have a few categories. You will have your profit, then you will have your taxes, your expenses, and the owner's compensation. So what percentages would you put here? So let's start with the taxes, because that's not really going to change depending on where you live. I live in Australia, Queensland, and I do put 30% aside for taxes. For taxing purposes, it's not going to be 30%, Just to be on the safe side, I do 30%. Worst case scenario, I get money back. But it really depends on where you live. Then you put aside your profit. I started with 1%, and then in every 3 months, I have a look at the finances of my company and adjust all the numbers. And please do not freak out that it's only 1%. It's not what you get out of your company. This is kind of a bonus. This is your bonus or the rain money, whatever you are using it for. I use it that every 3 months I can take out all the profit that I made as a bonus, or I have a choice to leave it as rain money just in case something is happening. But profit and taxes, those are the 2 categories that I'm not touching. Never, ever, ever. I'm not borrowing money from them. I'm not doing anything with them. I put them there first and I leave them there. And then it leaves you with 2 categories: expenses and owner's compensation. So owner's compensation is your wage, your monthly wage. I started with 50%. What I left for expenses is 90%. So expenses will be the very first that you have to have a hard look at. Go through the entire year of your expenses and have a look what categories are very necessary, what you need to really spend money on, and what you can actually say goodbye to. Do it frequently. Do it every 3 months. And that will help you to have a very healthy business. I also do my accounting twice a month. I do it on the 10th and the 25th. Why this approach really works? It ensures that you never ever operate at loss. And ensures your business remains financially healthy. Only spend on expenses that you really need to. This approach doesn't allow you to overspend on, for example, advertising. If I don't have money in the budget to advertise, I'm not going to advertise in a month. I'm going to make it happen in a different way and get new businesses in a different way. For example, I go to an event and make some real connections instead of advertising. So now that we talked about profit, let's talk about the best pricing strategies for small businesses. The first one is the cost plus pricing. It's a very basic but very safe approach. Best for retails, e-commerce and handmade products. So this is the simplest way to price. Take your cost and add the markup and boom, that's your price. So for example, if it costs $20 to make a candle, you add 50% markup and you sell the candle for $30. It is super easy to calculate, however, it doesn't consider customer perception or value. So don't just rely on cost plus pricing. Layer in value-based pricing, which we're going to talk about next. So the value-based pricing is charged for the transformation and not for the time. Best for coaches, consultants, premium services. Our candle 100% can be premium. So instead of charging based on costs, charge based on the value that you provide and the result that your customer gets. So for example, a beauty shop doesn't charge $150 for a facial because of the cost of the cream. They charge $150 based on the transformation. So the pros of this pricing is high profits and it allows you a premium positioning. But the cons can be that it requires strong branding. Just highlight your customers before and after transformation in your marketing frequently, so kind of justify your prices with that. The next one is tiered pricing that is the best for memberships, agencies, digital services. Offer different pricing levels so customers can choose the best fit for them. So for example, our social media marketing agency might offer a basic plan, which is $500 a month. It includes 5 posts per week. A pro plan for $1,500 a month, which includes 10 posts plus ad management. And a VIP plan for $3,000 a month that includes everything plus personal coaching, which is invaluable in my opinion. This pricing increases sales by catering to multiple budgets, but the cons can be that it needs very clear value differentiation. So what you can do is make each upgrade to feel like a no-brainer. Next up is premium pricing. charge more, work less. Sounds great, hey? Best for high-ticket service providers, experts, luxury brands. So people don't buy a coaching session or a consulting hour. They buy life-changing outcome. So that's what you need to focus on when you want to go with premium pricing strategy. So for example, instead of selling a 6 weeks fitness program for $500, a coach would say 6 weeks personal coaching, custom meal plans, weekly accountability calls, 100% results, or your money back. Just make sure you have a very, very strong offer if you choose premium pricing. Money back is always a good way to go. New price, however, is $2,000 instead of $500. One of my favorite examples for this kind of premium pricing was actually presented by Alex Hormozi. If you don't know who he is, definitely go and check it out. So the example says that there is someone, let's say that they are selling a time management program for $19. But if they niche down and sells the same time management program for sales professionals, that highlights all the aspects that needs for sales professionals, they can sell it for $99. One more level down and the price goes up to $499 if they are selling it this time management for outbound B2B sales people. So it's not the same program, obviously. It's very targeted and niche down to those outbound B2B sales people, but because of their level of income, they are more than happy to pay this much money for this that provides the exact solution that they need. We go to the price of $1,997 when we are selling time management who are in the power tool and gardening niche. So it's very, very specific. But if you have a look, we started from $19. So compared to the $19, we are now at $1,997. So instead of selling 100 products for $19, we sell one for this amount of money. And you can sell this because those professionals will appreciate that they get exactly what they need, that they will feel you are talking to them about their problems, so you solve their problem. That's why they are willing to pay $2,000 for your product instead of $19. The more you niche down, the higher you can price because you provide a very, very specific solution to a very, very specific problem. Just make sure that their income level will match your pricing. The next is psychological pricing, which is not really a pricing strategy. It's more of a method to make your price work for you. So all businesses looking to increase their conversions can use this. This plays on human psychology to make prices feel more attractive. For example, charm pricing, when $99 feels a lot cheaper than $100, or bundling, when you buy two get one more free. This encourages higher purchases, or anchoring, when you showing the original price, let's say $2.99 next to a discounted price, which is now $1.99, makes the deal feel a lot better. Just make sure you are honest and not lying about this. These are very easy to implement and most likely increasing sales, but too many discounts can hurt brand value. So use discounts sparingly and focus on the perceived value. The next one is subscription and retainer pricing, which is a very predictable income model. Best for service-based businesses, digital products, and memberships. Instead of charging per project, charge a monthly retainer for ongoing value. For example, a marketing consultant sell one-time packages, or offer a $1,200 a month retainer for continuous support. This is definitely a predictable cash flow, however, requires ongoing client retention, which is also not a bad thing. So how to make it work is to offer exclusive perks to keep clients subscribed. The last pricing strategy is dynamic pricing, which is flexible and demand-based, best for seasonal businesses, events, or the travel industry. Prices are adjusted based on demand, availability, or peak season. For example, airlines and hotels increases prices during their busy period. So it definitely maximizes revenue when the demand is high, but it also can be very frustrating for customers if this kind of pricing is not presented well. So how you can make it work is offer loyalty perks to reward repeat customers. So how to choose the right pricing strategy for your business? For product-based businesses, I would recommend use the cost plus as a baseline, but layer in a value-based pricing for higher profits. For service-based businesses, use value-based, tiered, or premium pricing for better results. And for a sustainable growth, use the profit first method, so you always take the profit first. So pricing isn't just a number. As you can see, it is a strategy. And if you want expert help setting the right price list for your business, book a free, no obligation discovery call, and let's create a pricing plan that makes you more money with less stress. So drop a comment below. What pricing strategy are you using right now? Are you happy with it? Do you have any question? Do you need to implement another pricing strategy? Let's chat. And don't forget to like, share, and subscribe for more game-changing business strategies. See you in the next video.